Good morning. This is Peter Stick with New World Oil and Gas. I'm joined by Chris Einstrom, Chairman of New World Oil and Gas, and we'd very much like to welcome you to today's call. The format of the call will take place in the following way. Chris and I will first give you an overview of what the company has been doing and what the plans are for the future. After this, we've received many questions over the last couple of days, and we'll venture to respond to as many of those as possible. And finally, calls that are put through during the call will be addressed. After this, if we haven't addressed any of your calls adequately or to the extent possible, we'd appreciate it if you email us. Or email St. Brides, and we'll get to those questions and respond to them as soon as we possibly can. The board receives many messages, and we try to respond to all the messages that we possibly can. We'd like to remind everyone that for the purposes of this call and for the communications that we make in general, be it through RNS, email, or otherwise, we're limited in what we can say, sometimes by reason of the fact that we are in the middle of negotiations and there are confidentiality provisions that prevail upon us, but also as a entity with publicly listed shares, we cannot make inappropriate statements. For the benefit of new shareholders, shareholders that have possibly only invested in New World following or during the open offer that took place in July, we just wanted to give a bit of a background on the company. New World was formed in 2010 as a E&P, an exploration and production company. The founders, including George, my fellow executive director, and I spent about a year combing our databases and contacts for exploration projects we thought could be interesting. New World was then listed as a cash shell in May 2011. We farmed into New World's first project, the Blue Creek project in Belize, in June of 2011. Then we farmed into New World's second project, the 3 licenses in Denmark, in October of 2011. So we got to a very quick start and committed to quite a lot of work on those two projects. Both projects were pure exploration plays, which obviously comes with a degree of risk. And in order to de-risk them, our work programs included the shooting of 240 kilometers of 2D seismic in Belize, 340 kilometers of 2D seismic over the 3 license blocks in Denmark, a 75-kilometer 3D seismic program in Denmark as well. Now, the company's approach and strategy in doing this was to apply technology to de-risk its projects in order to justify further investment in each project. So each of our projects was a staged investment, and we allowed ourselves the opportunity to de-risk every project, see where we got to after that de-risking before committing to invest further money. As a result of this strategy, and following both internal and independent third-party advice, the board decided to drill 2 wells in Belize at the end of 2012 and at the beginning of 2013. Though the wells were not deemed commercial, they did have encouraging shows such as live oil through the shakers. In contrast, just this past Tuesday, the board decided to relinquish its Danish licenses because even though we found the licenses to be prospective, the risk-reward offered did not match our profile or our funding abilities. And as you probably remember for the shareholders who have been with us for a while, just prior to drilling in July of 2012, the company was readmitted onto the AIM as an operating company. One thing, and this is a statistic that I thought would be interesting to share, if we look back at how the company spent its money, or the money that it had raised from investors since its inception, 70% of its funds have been spent directly on operations. 10% of the funds went towards the cost of raising the funding. 10% went to director remuneration, and 10% went on G&A. Many of you probably just started to hear about New World Oil and Gas, I would say post-April of 2015. But I wanted to also fill you in a little bit on how we got to that point. Following the drilling campaign in Belize, the company needed to raise some additional funding in order to continue its operations. As you know, until you make a commercial discovery, an exploration company needs to raise money to continue its operations and business development activities. And even when a commercial discovery is made, much funding is required in order to develop this discovery. Maybe Chris can talk to this point, because I know Chris has a ton of experience managing operations, and I think he's been directly involved in making sure that his operations have been adequately funded.
Sorry, Peter, what do you want me to comment on, whether we acted correctly or...
No, I think it's interesting to note, and it might be interesting for our listeners to understand how capital-intensive exploration is, and even once you've made discovery, that's probably where it even becomes even more capital-intensive.
Yeah, I think the issue about exploration is it can be a long-term thing, it can be a short-term thing, depending on your success. You've already pointed out that our projects carry risk. We assess those risks at a minimum, in some ways 1 in 5. And what people have to remember is that, if you're lucky, you might come good with your first one, but in reality, if you've got a portfolio, you have to drill 5 wells to have 1 success. So, to be able to minimize those risks, there is an amount of capital that needs to be spent up front. I think the company acted very responsibly in terms of doing that in a phased way, both through 2D and 3D seismic, and then through a series of studies. In some cases with Belize, we felt we had de-risked it sufficiently to be able to go ahead and drill our first well, and then subsequent follow-up wells as well. And in the case of Denmark, as you've pointed out, we couldn't de-risk it sufficiently for us to be able to go ahead and make that investment. We've exited at probably the right time. So we have been in some ways lucky and unlucky in Belize. We found oil. You don't get oil across the Shakers without having some kind of proven hydrocarbon system. What we were unlucky in doing is not finding a valid trap. Now, we still have options in our portfolio in Belize that we can go off and do that. You've made the point that 70% of the capital that we have raised has gone into those operations. But, if we are successful in Belize in the future or in future projects, there is no doubt that the majority of our capital will continue to go into testing ideas, testing technology, and ultimately developing any discovery.
Thanks, Chris. And I also think that in addition to the oil over the Shakers, which was very exciting, our neighbor adjacent to us has recently also made a discovery. So I think we were all. I think the choice of license block has been validated. We haven't hit the home run yet, but I definitely think we're in the right ballpark. Once the drilling campaign was over in Belize, the company obviously needed to raise more money to continue. And at that point, the company found a strategic investor in Neil Petroleum, chaired by a gentleman with significant, verifiable experience in African and Middle Eastern oil and gas transactions. Neil Petroleum is a registered Luxembourg company. Its directors and shareholders were, and their advisors were all vetted. Their monies received directly via international bank transfer. They were represented by highly reputable London solicitors, and we felt very comfortable dealing with Neil Petroleum. Neil Petroleum committed to invest a sizable amount of money and to bring aboard new projects, which is really something that the company needed at the time. And the board believed that this could be a good fit, could be a good tie-in, and we were particularly interested in the experience that Neil Petroleum brought from Africa and the Middle East. This was clear, and this was clear industry experience, transactions which were known in the industry. Ultimately, and unfortunately, this investor, Neil Petroleum, did not manage to meet its commitments. However, management successfully negotiated that the $4.8 million that was placed into escrow as part of the investment commitment would be retained by New World as compensation for the deal not being completed. At Neil's request, €1 million from the escrow funds was invested into the Almaram transaction, the completion of which was subject to due diligence and refundable should New World decide not to go through with the transaction. New World ultimately, as you know, decided not to complete the transaction and is now seeking the return of the €1 million. This is being done both via direct negotiations as well as by using the dispute resolution provision of the agreement with the shareholders from Almaram, which calls for a DIFC-LCIA arbitration in Dubai, where the governing law and language are both English. I just want to recap on Neil because we receive a lot of questions about Neil Petroleum. Even though the Neil Petroleum investment did not turn out as anticipated, through tough negotiations, the company kept the escrow funds without any dilution to the shareholders or payment of broker fees, which is no small feat for any company. As well, the company has kept full rights to the €1 million Almaram claim. So, all in all, yes, unfortunate that the Neil Petroleum deal did not take place, but at the end of the day, for a company that needed to raise money, we did, and we didn't end up too badly. Now, with our resources dwindling in 2015, the company decided to attempt to raise money in order to continue its operations. A March 2015 roadshow showed minimal interest from our existing shareholder base. Cornhill then committed to and raised the funds. The board read the results of the May EGM and the voting down of a resolution to put forward by the board requesting the waiver of preemption rights by shareholders at the AGM as a message from shareholders that they themselves wanted to participate in placing. As a result, the company listened to its shareholders and made a £3.5 million open offer to shareholders, of which approximately $1 million was taken up by existing shareholders. This was an impressive endorsement of the open offer by existing shareholders. The balance of the offer was also taken up through an agreement with Cornhill, the company's brokers. Now, in the industry, an open offer, you never know how many shareholders or what the amount of shareholder interest is deemed a success. But in this market, $1 million is definitely an endorsement by shareholders. In total, 3.5 million pounds was raised, and the company's future secured, and the company placed on a sound financial footing. A lot is made of the offer price of the placing. The offer price was placed, and all of this is in the open offer circular. It was placed at a slight discount to the close of trading on the day before the initial placement was announced, and a significant premium to the offer price of that initial placement. In its decision, the board was driven by the priority of ensuring a successful open offer and raising the funds needed to fulfill its strategies under the open offer circular. The board's efforts to raise funds to be able to focus on the company's strategy was endorsed by the open offer participants. And now the board is actively implementing that strategy. I know there are a lot of questions on this point. We've received a lot of questions on the open offer, and we will get to those questions as soon as the presentation is completed. Now, a bit of a status report on our projects. Even though we relinquished Denmark, I think it's worth discussing for just a couple of minutes. The company announced the relinquishment of its 3 Denmark licenses on Tuesday. This followed a very lengthy attempt to farm out parts of our working interest in those licenses in exchange for an investment in the blocks. The company did everything it could to extend the licenses by committing to conducting additional work on the blocks. We did surface geochem surveys, 2D reprocessing, vapotech surveys, fluid inclusion studies, and so on. But despite this, and the engagement of advisors and experts in this industry and geographical space, we only found some minimal interest. I'd like to ask Chris to spend a few moments explaining why we were so interested in keeping the blocks and why he thinks it was so difficult to find partners in the current environment.
Yeah, thank you, Peter. I mean, I think not only with Denmark, but also with Belize. These are proven hydrocarbon provinces. People know Denmark as both an onshore and an offshore play. When we looked at the current portfolio we had, there were 2, I think, very interesting opportunities. One, an extension of a proven oil reef play that extended out of Poland and Germany into Denmark. That was the focus of some of our seismic. We saw valid plays there. They were deep and they were challenging, but certainly the concepts that we went into were proven to be there. Then there is the classic Southern North Sea Rottlingers and Triassic sandstone plays, and we found some good valid traps there through both our 2D and 3D seismic. So I don't think this was an issue of did we see prospectivity? Yes, we did, and we did see it there. There were some offset wells that had not been successful. Our seismic tended to show those are being drilled off structure. And therefore, we still felt that the risk analysis that we'd done and presented backed up our view that there were viable targets here. I think the challenge we have found is none of those targets were particularly shallow. Certainly 3 to 4 kilometres to test the stratigraphy that we wanted. And, the indications that we got from drillers would suggest that the cost of a well was significantly higher than we would be able to manage with our own resources. Therefore, looking for a partner was the right thing. I think people that we looked at, and we looked at a range of people or companies from small scale to big scale. We had enough interest to come through into the data room and look at the data. But at the end of the day, they probably saw the same thing as us, that the cost of drilling a well, and as we call it in the industry, the expected monetary value, where you take the risk of success and take away offset that against the risk of the drilling a well was always negative. And that's why not only has it been a challenge to find a partner, but it's also been a challenge for us to find that as a viable opportunity and therefore to invest the company's money. And I think we've made the right choice. We've acted responsibly in terms of de-risking it, and we're exiting at the right time with no further commitments.
Chris, and I know that obviously you act in a non-executive capacity, but how would you rate the company on its operational capabilities and how operations were executed, be it in Denmark or Belize for that matter?
So the first thing I would say, Peter, is we have always executed on budget, which is an important thing, especially for a small company like ours. But I think more importantly for me as a big company person and also just from a responsible individual, is we have never hurt and never had any serious accidents, spills, etc. in conducting any of those operations. And I think that is an aspect of our activity, whether it's on the seismic or drilling, that the company should be proud of, and our shareholders should also be proud of. So I think we have executed efficiently. We have executed within the budgets and AFEs that we have put forward, and we have executed very safely. Therefore, not only the management of the company has behaved and delivered successfully, but the way we have managed our contractors and the selection of our contractors should also be complimented.
Thanks, Chris. I know that I was personally involved in managing the relationships in Denmark, and I can say with confidence that the relationships there, both with the Danish government and our partners, remain excellent. And we've been assured that should New World ever want to come back, reapply for these licenses or other licenses, we would be welcomed back with open arms, which I think reflects what you say. Because Chris, as operator in Denmark, and everybody probably remembers that our partners in Denmark were the NSF, the North Sea Fund, who are a public company. They're a company. They're a state. They're a crown corporation, if you will, a company owned by the state, and they were a paying interest partner. So the Danish state, funded into a joint bank account held by New World and managed by New World. We're confident in our operations, approved our budgets, and continued to work with us for a period of 3-4 years, and the relationship remained a very, very positive one. Now, the status on Belize. Yes, everybody is aware of the fact that the block is up for relinquishment on October 12th, so the time is ticking. But the board believes in this project and its prospects there, and we're working tirelessly to find a way to drill our best prospect there. What we're doing concretely right now is, among others, talking to drilling contractors and other investors, trying to get discounts on equipment, on services, so on and so forth, so that we can bring the cost down for the company to be able to manage participation in this well. We realize that October 12th, as I said, is just around the corner. But the good news is that the prospect is easily accessible. The rig is about a 2-hour, 3-hour drive away. So we still have time to mobilize, and we still have time to meet our commitment, which is to spud by the end of October 11th. A lot of work has to be done. I'm not saying that it is easy, that we will necessarily do it, but every effort is being applied to achieve this task. Just wanted to, and this goes to a lot of the emails that we receive over over our website. What kind of opportunities do we seek for the company? And what is the company doing on a daily basis? Well, as I mentioned, Belize is taking up a lot of effort right now. We're trying to make sure that if it comes, the prospect is ready to be drilled, that a rig could be mobilized. We have discussions going on with government ministries on permitting, so on and so forth, with our partners and our potential investors. We're also, and this is one of the benefits of having board members that sit in various countries, Steve and I in the Middle East, Chris in Moscow, Fred in the U.S., though he's sitting right in front of me in London today, and George in Canada. We're spread out quite a bit around the world, but that also means that we have access to a lot of opportunities. And what we're focusing on are the opportunities that are outlined in the open offering circular, particularly opportunities that have the potential of bringing early cash returns to the company. When we identify suitable projects, we first assess them in-house, using in-house expertise, and this would mean that even in his non-executive capacity, Chris, who has this expertise, will sift through it, give us his assessment, and then if a project is interesting, we get an independent third party to confirm or to dispute our assessment. We're not only looking for third parties to agree with us. It's very important for us to get pushback, and we often do, and we engage in meaningful discussion, and when our views are proven wrong, we move on to the next project. One thing you've probably heard us mention in RNSs in the past is the term oil field enhancement. And I was just, Chris, maybe you can speak to that to help us understand what is meant by oil field enhancement.
Yeah, Peter, I think when we look as a company at what you've described as projects that can bring near-term cash flow, I think they fit into a category in the oil industry which are called mature projects or unexploited projects. These can be both the oil field enhancement, they can just be undeveloped reserves. I think for our shareholders, they should be aware that these projects, whilst they have removed the uncertainty of whether there's hydrocarbons there or not, most of these have been drilled, most of them have been produced. So in some ways, the work has removed the uncertainty. There is still risk, and the risk is both technical and financial. What are the risks associated with? Well, in the case of undeveloped oil and gas fields, it may be a cost issue. Companies have looked at it in a conventional way, and you're going to have to look at it in an unconventional way to be able to exploit some of that oil in the ground and get it to surface. Some of that might be drilling new wells, some of that might be fracking technology, some of that may be the way you complete and produce oil out the ground. But there would be a risk as to whether that approach would work. The other one which more fits with the oil field enhancement, these are fields where production has happened, the plateau of production has passed and the field is in decline or reached a state of equilibrium that is at a low level, sometimes commercial, sometimes not commercial. And the risks there are more about technology. Is there technology that has been missed by the existing operator? Some of these fields have been produced, 20 years ago, and they're now in, a care and maintenance mode, and haven't had new technology applied to them. So the risk here is, will that technology work? Whether again that's enhanced oil recovery, water flooding, downhole pressure maintenance, etc. But with all of these projects, there will be some risk, but the uncertainty has been removed, and certainly the risk is much lower than the exploration projects that we've been following. But it's one about application of techniques and application of technology, and I think through ourselves and through our partners, and as Peter has mentioned, doing the right due diligence, we can investigate those before investing significant money.
And Chris, why would those kind of projects be available to us? Why wouldn't the holders of the licenses or the owners of the wells not do it themselves, for example?
Well, again, there's several categories here, Peter. There's ones where people have drilled and it just doesn't fit with their portfolio, and they're sitting in the government's portfolio in some ways. Some of those exist in the Middle East, some of those exist all around the world, as we've seen. And that's more about either that particular field, not meeting a company's criteria. Maybe the reserves were too small, maybe the cost of extraction was too high, and they had better opportunities in their portfolio. Then there is other opportunities where companies are sitting on them, but they just have run out of money or haven't got sufficient money to be able to go and exploit them. And so they're looking for partners to come in and help them fund the development of a field and move it forward.
Okay. I guess one of the other issues that comes up and questions that is often asked is, and Chris, I'll let you speak to this first because you have a particularly good vantage point from where you are. What do you believe the company's position is in the current market, and what do you think about the current market, and what can the company do in the current market?
Well, I think it would be an underestimate to say that the oil and gas market at the moment is nothing other than volatile. Only yesterday the oil price went up 5%, it's down 1% today. I think we're living in a world of significant volatility, and the question really on everybody's mind is how long that will go. For us that have worked in the industry for a long while, these are not new phenomena. I've lived through oil price crashes in the 80s, 90s, and in the 2000s. So some of us have a lot of experience, some of it quite brutal in terms of managing a way through what is a significant downturn. I think what I would say is that this current period of volatility is, I wouldn't say unique, but certainly unusual. I think it is unclear what is going to happen. It's not only a supply and demand. It is a battle in some ways of technology, the battle between the massive rise in unconventional resource development in the US and the undeveloped unconventional resource that sits around the world, and the conventional resources that sit in OPEC and other places like Russia. So this is about a battle on a number of fronts, and I think on top of that you've also got the major uncertainty in the direction of economic growth in the world, and all of that weighs on the price. But the fundamentals of the industry as you look forward are still positive. The world will still need oil and gas. There is still growth in the world, and therefore I think you have to look longer term and believe that things will improve. There are people out there who believe it will be longer term. There's a report just issued by Goldman Sachs this morning saying they expect 15 years of low price, and $20 a barrel in the short term is not unreasonable. I can't tell you whether that is a correct report or not. There's others who are still rather bullish who say the price will improve and $60, $70 a barrel will be available, in the near future. Whether that's 2-3 years, who knows? So I think nobody has a crystal ball on this. Nobody will be able to say what the market is. But I think longer term, the fundamentals are good. A number of developments are being deferred. Those that are working in the low-cost environment, in some ways, New World Oil and Gas was operating in that. We were onshore. We're not in unconventionals. And we're looking at very simple technology application, drilling of conventional wells, shooting of conventional seismic. All of this is relatively low cost. We're not in deep water. We're not in unconventionals, all of which we know at the moment are the ones, the projects that are suffering because of the high cost, let alone the tax environment. So, what you have to say is what companies are going to survive through this. The big companies are all about cost cutting, others about divesting their portfolios. I think where we are, we're in quite a strong position for two reasons. One, we are able to manage our costs. I know there have been some questions around our structure and how we go, but we have significantly reduced both our fixed and variable costs. As a listed company, we don't have any, permanent residences or premises from which we run. We tend to do this all virtually as well. So we are able to manage our costs going forward, and I think that is a critical thing. Also, we are able to manage any of our commitments. We've made the right decision on Denmark by not committing to the next stage of drilling. In Belize, we have options. Yes, if we can get a farm-in partner, we can. If not, we can always reapply for the license and push our commitments further out and see what the oil price does and then come back to it. And then we're also working and continue to work in the environment where we believe we can manage our costs and not overstretch ourselves. So we would never get into a situation where we've seen with a number of E&P companies at the moment that have taken on significant commitments, have obligations, and now no longer have the money to be able to fund them. And they're the ones who are struggling, not companies like New World Oil and Gas.
Thanks, Chris. I believe that the price of oil creates obviously challenges, but also opportunities for us, and we're seeing it. I'm seeing it on a daily basis with the influx of various opportunities coming our way. I mean, it's a lot to process, but there's definitely more out there, and the quality of what's out there is better than it has been in quite a while. But I think that owing to the volatility that you mentioned, Chris, the key is to have a strong board, like I believe ours is, that enables you to navigate the tough waters. And I just like to take this opportunity to remind you who I'm talking about when I'm talking about the board. There's you, Chris Einstrom, who's our non-executive chairman, a geoscientist with 33 years experience, with senior roles in exploration, managing production assets for both majors and oil service companies all over the world. There's Fred Hodder, also a non-executive director with decades of public company experience, including as the CFO of Nelson Resources, a company that was ultimately sold, I believe, to Lukoil for over $1 billion. There's Stephen Polikoff, a non-executive director, former senior Clipper Chance lawyer, and former general counsel of a publicly listed oil field services company. There's George Stick, who spent 23 years at a major, mostly managing Arctic operations, and almost 20 years managing both exploration, development, and production operations in Kyrgyzstan, Kazakhstan, Cameroon, and elsewhere around the world. Finally, there's me, Peter Stick. I'm an international transactional attorney, qualified both in the U.S. and Canada. I've worked extensively negotiating energy deals, both on the acquisition and finance side in the former Soviet Union, while I was in private practice for major U.S. law firms. Also, I'm a business development specialist, and I have real experience sourcing and, most importantly, I think, closing and finding finance for deals in the sector that we're in. All of your board members believe in the company and have participated in the placings alongside the investors from the beginning. We were restricted from participating in the latest placing. Also, to my knowledge, none of us has ever sold a share in the company. We are not paid salaries, so our interests, I think, are as aligned as they can possibly be with those of the shareholders. I believe what I've just described is the ideal board to execute the investment strategy as set out in the open offering circular, which is what shareholders investing in the placing have mandated the board to do with the proceeds of that offer. Now, there's some confusion about what certain individuals have written in TR1s and in blogs. For example, TR1s deposited by Ben Tierney on behalf of the NUOG Action Group read, among others, that NUOG Action explicitly has no desire to gain control of New World, but one specific goal it has is to seek an appointment on the board of directors of a credible non-executive director to represent the interests of private shareholders and members of the NUOG Action. But if you read the NUOG Action website, the group appears to be proposing 3 directors and a possible change of course from the oil and gas sector. I would like to make clear that New World's board is open to adding members, particularly those with relevant experience that can be additive to the board's skill sets, which would benefit the company and the shareholders. This is not always easy to find with the compensation structure that the board currently has, but we're absolutely welcome to it. That being said, investors in the open offer invested their money on the basis of the board's strategy and use of proceeds sections as outlined in the open offering circular. The board believes that it is its responsibility to follow and execute this strategy. That is what we are doing, and that is what we will continue to do. And now that ends the presentation portion of this call. And I'm going to jump to the questions. We've received many of them, and I will try to answer as many as I possibly can in the time remaining. Let's see. What is the current cash position of the company, and what is the burn rate? Currently, the company has approximately $4.5 million. And the burn rate is approximately, on an annualized basis, $70,000 per month. We also have receivables of approximately €1 million and 100,000 pounds, rather. Sorry. What do you intend to do with the remaining proceeds? Well, we're pursuing the company's investment strategy per our RNSs and the open offering circular. Why did you allow a very dilutive placing at such a low price when you could have easily conducted a placing at a much higher price? I believe this question was answered in my presentation, but I'll try to repeat it because I think it's an important point. First of all, when people tell us that we could have easily received different prices for an open offer, I would challenge that because the board was in daily, if not hourly, calls on this point, and it's not what we saw. The offer was priced at a slight discount to the close of trading on the day before the initial placement was announced in late April of this year, and a significant premium to the offer price of that initial placing. Our decision was driven by the priority of making sure that the open offer would be successful, meaning that we would raise the money needed for the company to continue and to fulfill its strategies. Next question. With the Danish licenses now relinquished, what are the company's prospects? The company has excellent prospects in Belize, with some, I believe, 3 or 4 drill-ready prospects among them. And I think it might be worth mentioning, and I'll ask Chris to speak to them, why we still believe in and are so excited about these prospects.
I think we've answered some of this in the presentation, Peter. I would just focus on 3 things. The first is we've de-risked the what we call the play, the geology in some ways. We've proven there's oil in the area, there's offset discoveries, and we've proven we've got reservoirs. We can drill these wells at relatively low cost, $2-3 million, and any success can be easily exploited at relatively low cost. So again, it fits with our strategy that we've tried to outline that I think is viable both in the current climate as it was when we first started out this company. The only risk here on certainty is on trap. We tested one trap type. We are going offset where our seismic gives us a little bit more confidence that we've got a valid trap, and therefore it still represents a very viable opportunity for the company.
Thanks, Chris. But I mean, even if we're forced to, for example, reapply for the Belize prospects, we still find ourselves in an enviable position in this market, which is having cash, no debts, and a lot of opportunities. And our board is experienced. We have the know-how to source, evaluate, close, and find and operate projects. So I don't think that the loss of the Danish licenses, obviously we like the prospectivity, but they no longer fit our investment profile. And that's the good thing about having experience, is that we have the capability to judge these projects. We're agnostic as to the projects. All we want is the right project for the company at the right time. Next question is, are you considering a redistribution of remaining cash to shareholders and a wind-up of the company? No, not at all. That would be inconsistent with the investment strategy and the use of proceeds outlined in the open offering circular. I'd invite all of you to read it, to go back to the circular, and I mean it's black and white what the board believes the basis for the investments made in the company has been. And we believe that the overwhelming majority of shareholders want us and expect us to execute this strategy. Let's see. Why have none of the directors resigned, bearing in mind that they have lost all the confidence of shareholders? Well, we've spoken to many shareholders representing both small and significant shareholdings in the company that support the board in its strategy. This is the nature of public companies. It rarely happens that you have universal support, but you do your best to execute a strategy that has been approved or invested in by shareholders, and that's what we're doing. I mean, we have people who agree with our strategy. We have people who don't agree with our strategy. That's the nature of a public company. Next. Why does the company never respond to inquiries made on its website? The board responds to most of its emails, and we do receive a lot. It does not respond to emails seeking non-public information. In fact, we welcome constructive dialogue, and I think the NUOG Action Group can attest to that. Why did we push on with the open offer after a shareholder vote went against it? Well, the shareholder vote wasn't against the open offer. It was against the waiver of preemptive rights. The open offer made sure that shareholders had a right to participate in the placing, and they did, to the tune of $1 million. Why did New World threaten to use the cash box to force the open offer through? Why not listen to the shareholders and let the market play out? I don't believe we threatened to use the cash box. I think the position in respect of the cash box is well outlined in the offering circular. When is the AGM in 2015? The AGM has not yet been announced, but I believe it will be in the very near future. We had record participation in the previous EGM, and I encourage shareholders to participate at the upcoming one. Why haven't the board resigned after everything that has happened? Why should the board resign? The board has taken the right steps to rescue the company from a difficult position in a difficult market. Now, financial footing, and is in a position to capitalize for the company and for the shareholders. Will New accept shareholder votes regarding Adam R. and step aside if the vote goes that way? Many questions have been asked about whether certain or all members intend to resign from the board. The board is pleased to have guided the company to this current state where it is funded and can focus on finding exciting new projects and to fulfill the criteria of the investment strategy that we have outlined. We believe that we have the expertise to do this, to succeed and to bring value to the company as a board. That being said, we serve the shareholders, and it's the shareholders that ultimately decide the composition of the board. What has happened to the director loans? This is described in the interims and annual reports. The company has made a payment demand in respect of Mr. Kelleher's loan, which, including interest, is approximately $152,000, and we're seeking to enforce our legal rights should the terms of the demand payment not be met. George's and my loans are now at about $50,000 each. That's both principal and interest remaining. What has happened to the fake shake monies, and will we recover them? What are the timescales? The company, as I mentioned in the presentation, is enforcing its rights under the contract that we have with Almaram shareholders, and this includes direct negotiations. We're also preparing for arbitration, which I mentioned would be governed under LCIA DIFC rules. The arbitration would be held in Dubai and under English law. Why is the call muted? It's really the standard medium used to hold the call when you have so many callers. It's employed by many companies for shareholder calls. Why do we have to submit questions beforehand so that they can be filtered? You didn't have to submit questions beforehand. I believe the RNS describes how you can submit questions during the call as well, and we're receiving questions during the call. I see them up on my screen. Can the board guarantee they will not spend a penny of the money raised by the open offer until shareholders have a vote on the direction of the company, specifically the proposal for Adam Reynolds and his team? Absolutely not. The board is operating pursuant to the strategy outlined in its RNS and open offering circular. This is the basis upon which shareholders have invested in the company. We're pursuing this strategy, which includes the use of proceeds. Please confirm that you will adhere to New World's articles and memorandum of association, and that 2 board members will be up for re-election at the forthcoming AGM. Confirmed, and I'm one of the board members that will be up for re-election. Are there any undeclared contingent liabilities in relation to the Belize licenses? No. Why did you fail to take into account the specific market circumstances and force demand for New World stock when arriving at the price of the placing an open offer? The board is focused on the company's operations and survival, not trades in the company's shares. That process is fully outside the company's purview. It's governed and managed by processes independent of the company and its board of directors. Why did you pay $1 million to Dr. Al-Fayed? Prior to completing due diligence, you claimed you would. The transaction called for earnest money to be paid with a legal mechanism to retrieve it should due diligence not pan out to the company's satisfaction. The company is in the process of enforcing its rights to recoup these funds. Do you believe British private investors can ever trust you again? Well, absolutely, and they have. The open offer shows this. For every negative comment that we have, we see plenty of support. That's the nature of this as before public companies. What is written in blogs is not the only reflection of the level of boards or management support. But I would very much like to take advantage of this opportunity to also set the record straight about a particular issue. For some reason, my wife has been accused of a whole slew of sinister things. These accusations are false. She's a human rights lawyer focusing on promoting human rights in the country of her birth. As with many authoritarian regimes, people engaged in these types of activities are persecuted using various tactics, including disinformation and the threat of physical harm. This has led her to seek and obtain asylum from a European Union country from which she is free to continue her work. I'm very proud and very supportive of her, and I have to say, very disappointed with this particular issue and the line of questioning that's come as a result of this. What plans, if any, does the existing board have to give me any faith in their management to repay shareholder loyalty? New World has many long-term shareholders, and we are very appreciative of their support. Let me assure you that the board works very hard to find projects that can be beneficial to the company and its shareholders. But as I mentioned previously, exploration is a risky investment. But when it comes in, it often benefits the investors with excellent returns. The board's interests are aligned with yours. We've never sold shares and have been holding them since the beginning. We do not earn salaries. Our only upside comes from making this company work for the shareholders. I think this is what investors want, a board that is aligned with shareholder interests. So your shareholder loyalty is being rewarded with the board's loyalty. We believe in the company. In the case of George and I, we are co-founders. We've invested significant money and never sold any shares. We believe in New World and that it's well positioned despite the market downturn. More than anything, we believe that we have the expertise and the ability to source opportunities and the know-how to execute the company's investment strategy. I think we've been through a good 40 questions, and unfortunately, I think we've come up against the clock here. I hope this has been informative. I thank Chris for his time today. I know that every time I speak with Chris, I learn something new, and I greatly value his insight in the industry, and I know that he has gone above and beyond as chairman of this board, particularly as non-executive chairman of this board. I'd like to thank all of you for taking time out of your day to be here with us today. I hope you've come away with a better insight of what the company is doing and what the board's thinking is. As I mentioned earlier, the AGM is going to be announced in the near future. I hope we see as much, if not more, participation in this AGM than we did in the May EGM, which was very, very well participated in. And we look forward to being able to inform the company on the progress that we're making, executing the investment strategy that we've been talking about, the investment strategy that's in the open offering circular, And we always welcome your comments and your feedback. So thank you very much. Have a good day, and hope to see you at the AGM.